welcome to the latest edition of the Purple Sofa podcast. I'm Sophie Holmes.
And I'm Andy Steele.
And today we're going to be talking about the autumn statement that was presented on the 26th of November 2025. So I suppose what were your initial thoughts of the budget?
Well, most of the people in the office sort of sat down at 12:15-ish, ready to find out what was going on, and it all sort of started with a bit of chaos, didn't it? When somebody spotted that the OBR had published most of the budget online earlier that day. So we were watching it on the BBC, and the BBC normally let you watch the Prime Minister's questions in the run-up to the budget, but because there was all this drama about the budget being posted early, we had this weird scenario where live on TV, all of the presenters and commentators were reading through the budget and sort of, announcing stuff before Rachel Reeves did. It was bonkers. We can just imagine being in their shoes, knowing you're about to make the biggest presentation of your life, and just knowing that everyone out there already knows.
They're already talking about it.
I just feel so sorry for it. It must have been awful.
Do you think it was a positive budget?
So there'd obviously been loads of chatter about it in the run-up to the budget, and everyone was fearing the worst, and there were so many rumours about tax going up, or tax rates going up, VAT thresholds being dropped, all sorts of mansion taxes, etc., which did actually happen. So I think probably my overall feeling is that, yeah, it was bad, but perhaps not as bad as it could have been. And she seems to have spread the burden amongst everybody. I mean, there are winners and losers, as always, which again we'll come on to. But I suppose I came away from it thinking could have been worse, but has she actually done anything to boost the confidence of business owners and in particular owners of SMEs? Probably not. I think the national minimum wage increase will have a lot of owners of sort of hospitality, leisure, high street retail, care sector businesses sort of scratching their head, wondering how on earth they're going to pass these cost increases onto their customers when they've already had to increase the prices so many times over the last few months, years, on the back of rising energy costs, the cost of the stuff that they're buying, this year's national minimum wage increase.
And last year's NI increases for some businesses.
The NI increases. So they're having to put the prices up at a time when the consumers are trying to spend less because they've got less money in the pockets, because of the cost of everything going up, because of tax rises, etc. So I really feel for the owners of hospitality, leisure, etc. at the moment, because it's very tough. And there wasn't a lot in there to help them.
So if we start on a positive note, the winners from the budget.
Yeah, so the winners,
as you've just mentioned, people on minimum wage.
Yeah, so people that are currently earning national minimum wage, they're going to get a pay rise in April, which is obviously good for them. I suppose it's also good for the businesses that we've just mentioned, hospitality, retail, etc. If people are earning more, then they've got more in their pockets. Whether or not they've got enough to spend more in hospitality, etc., time will tell. But on the flip side, I do think it's going to make young people perhaps less attractive than they have been in the past. As you know, national minimum wage is getting so high now. Some businesses will be reluctant to, employ young people at such a high cost when they might not be productive for the first year, 2, 3 years, etc. Thankfully, they have made some changes to apprenticeship and training funding, which seems to be a bit of a U-turn on what they did in the last budget. So I think that will help. But youth unemployment is getting higher and higher. it's sort of reminding me of the sort of 70s and 80s when youth unemployment was at such a high level, and that's why they brought things in like the youth training scheme well before your time. But I think, yeah, I think there's positives and negatives to national minimum wage being high.
But as you've said, on the flip side to that, the changes to the funding for SMEs for apprentices may help.
Yeah, we need to see the small print on that, but that was a positive.
One of the other winners was the 2-child cap being removed.
Yeah, so and I mean, increasing benefits is also a very hot topic. There's always two sides to every argument. Rachel's argument was that she's basically increased taxes in order to reduce national debt. I mean, I don't think anyone can argue that that's not a good thing. She did mention that £1 of every £10 that the government spends currently is going on interest. And that's just interest. It's not repaying the debt. It's interest. It's a cost. So it's vital that we get national debt down. And then she's also using the extra taxes to increase benefit payments. So families that are claiming universal credit, that have got more than 2 children, will now be able to claim more, which it's hoped that will reduce child poverty, which has got to be a good thing. Again, there's arguments both ways, and we're not going to get into that today. So yeah, and also you've got to remember that some families claiming universal credit with more than 2 children, they might have had a change of circumstance. They might have been fully employed, etc., for a number of years, and then things happen, health, employment circumstances, etc. People like that need help, don't they? So yeah, we'll no political comments on that, but they're one of the winners.
There was also a boost for bingo halls.
Yeah, I mean, Hull used to be the bingo capital of the world. Hull used to have more bingo halls than anywhere else. Did you know that?
No, I didn't actually.
I don't know whether it still has. I mean, there's still quite a few around, but yeah, bingo halls are struggling because there's so many online alternatives now, whether it be bingo or other types of gambling. So reducing the gambling duty for bingo halls will help bingo halls, help the high street, help the supply chains of bingo halls, etc. And they're basically funding that by increasing the gaming duty that online businesses have to pay. Although the increase doesn't apply to bets placed on UK racecourses, which will help the racehorse industry or racecourse industry. I think that's a positive.
And then another winner, a city that was mentioned a couple of times in the budget, was Leeds.
Yeah, Leeds were mentioned a few times. They've got quite a bit of funding and initiatives, etc., heading their way, which is great for Leeds. As a business based in Hull, we always listen out for Hull being mentioned. Wasn't mentioned once this time. I suppose we've had a little bit of a good run in that respect in terms of being given the devolved powers, the new Lord Mayor, etc. That's been mentioned in previous budgets.
Free ports and things as well previously.
Yeah, and also the electrification of the railway line from Selby to Hull. That hasn't been mentioned for a while.
No.
So is that still happening? There's a few other cities that were mentioned as well that are getting extra pots of funding, etc.
But Leeds being the most local.
Yeah.
So very positive for a few different individuals, few different industries, different areas, but there were a few people or a few industries that are going to be affected negatively from the budget.
Yeah, so we've talked about the winners.
Yeah.
Now for the losers.
So I suppose one of the big changes and that will probably impact quite a few of our clients is the increase in tax rates for savings income, rental income, and dividend income.
They're determined not to increase tax on what they call workers. And unfortunately, they've decided that landlords, owners of businesses, entrepreneurs aren't workers. So it's those people, sectors that are taking the brunt of not just the tax rises in this budget, but previous ones as well. So the Tories also attacked landlords at the sort of end of their tenure, and Labour have continued. So they're increasing tax on property profits by 2% from, that's April 27?
Yes. And then the dividend increase is from 2026.
Yeah, so the dividend increase impacts on the owners of SMEs. But I think it's also to disencourage landlords that own property as individuals to drop those into limited companies, because if you put your properties in limited companies, you take the profits out via dividends. So I think the 2% dividend increase is it's an easy win in respect of existing business owners, but it's also to deter landlords from looking at ways of avoiding the 2% increase.
So do you think it's advisable for people who either have properties, might be looking at incorporating them, or receive dividends to talk to their accountants about timings of those and whether it's going to be beneficial? You know, because it could be that maybe a salary would now work out roughly the same tax as a dividend, but that is corporation tax deductible.
Yeah, I mean sort of 5-10 years ago, you could save significant amounts of tax by paying yourself a small salary, avoiding employees and employers' national insurance, and then taking your profit out as dividend. The Tories introduced the dividend tax to try and narrow that gap. Also, the fact that corporation tax went up from 19 to 25% narrowed the gap further. So there's not an easy way nowadays of structuring your finances to save tax. And it may be that now the dividend tax is going up another 2%, that may make salaries more attractive to more and more business owners, because you're getting, especially if you're getting 25% corporation tax relief on those salaries. So there's calculations to do, but I think the savings, doing it one way or the other, are going to be fairly insignificant, because they've just closed all of the loopholes and got rid of all of the taxation incentives of being an entrepreneur, unfortunately.
There's also employers' national insurance to factor in on salaries, and that was obviously changed in the last statement that was done earlier in the year. And there was no changes to those rules from April next year.
Yeah, but with the national minimum wage increasing, everybody's employers' national insurance bills are also going to increase. So, no tax rate increases other than the 2% that we've mentioned there. But because she's not increased any of the personal allowances, she's not increased any of the the thresholds at which you start paying basic rate tax, higher rate tax, additional rate tax. As everybody's income increases, either by inflation or promotions, or because they're not increasing the national minimum wage, more and more people will be getting dragged into paying tax for the first time. They'll be getting pulled into higher rate or additional rate tax for the first time. So it's a really easy way of increasing tax take and increasing everybody's tax bills without breaking a manifesto, without increasing tax rates on working people. So yeah, basically everybody's going to be paying more. As she, to be fair, she did say that during a talk.
So staying on the national insurance and employee tax theme, salary sacrifice has been changed, the rules to that.
They're going to change the salary sacrifice rules so that you can only sacrifice £2,000 of your salary in place of pension payments. So quite a few high earners had been sacrificing a big chunk of their salary in return for a payment into their pension schemes. And the advantage of that is that you're avoiding employees' national insurance and tax, and the employer is avoiding employers' national insurance. Obviously, the government have seen that, and they've brought this change in so that, again, tax take will increase on anybody that's currently doing that. Again, there's you can see both sides of the argument. It's going to perhaps make saving for retirement less attractive to some people. I think retirement planning should always be encouraged and incentivised, but perhaps some individuals were sort of taking advantage of it a little bit. So I suppose the key there is, if you do have employees, or you're an employee that is using salary sacrifice, start talking to your accountant about what can we do in the run up to that to sort of mitigate the financial impact.
So you just mentioned, obviously, people who were using salary sacrifice to put money into pensions. Individuals were also using the ISA allowance, which previously was tax-free, up to £20,000. She made changes to that in the statement.
Yeah, so she's reducing the amount you can put into a cash ISA each year from 20k to 12k. Although you can top that back up to 20 by putting £8,000 in higher risk investments. And the logic behind that, according to Rachel, was that it means more people will be investing in UK companies, which I suppose is a positive if that does happen. Whether or not it will happen, time will tell. Not everybody is a risk taker. Not everybody, because the value of your investments in an ISA can go up as well as down. And if they go down in value in an ISA, you don't get any tax relief for that. Whereas if they're outside of an ISA, you do. So I think the advice is, if you're currently using an ISA, particularly if you're putting in more than 12k a year, is speak to your financial advisor and just think about what you need to do post these changes or in the run up to them.
Another change she implemented as well was the rules regarding expats and the length of time to qualify for a state pension.
Yes, a lot of people leave the country but make voluntary national insurance contributions so that when they reach state retirement age, they get a state pension. Rachel doesn't like that, so she's changing the rules around that. So it's going to be harder for expats to get full state pension, sometimes many years after leaving the UK. So I suppose if you are an expat currently paying voluntary national insurance in the hope of getting a full state pension when you retire, you need to look into that or speak to your financial advisor.
So we've talked a lot about national insurance. That's been a recurring topic, a lot about taxes for individuals. So cars, there was changing pace quite quickly. There was a couple of announcements, one for mobility cars and one for electric cars.
Yeah, so Motability, for the viewers that don't know, that's it's a scheme that helps disabled and also elderly, I think, people with the cost of cars. But clearly what's been happening is a lot of people have been getting sort of luxury cars funded through Motability. So I think she mentioned Mercedes. So she's changing the rules so that under the Motability scheme, you can't get luxury cars anymore. I don't know what the definition between luxury and non-luxury is. But to me, that does seem like a little bit of a crazy loophole that does need fixing. And then the other change to cars is what's been happening over the last few years is as more and more people move to electric cars, the sale of petrol and diesel has dropped, so the revenue from fuel duty has also dropped. So what she's doing is she's bringing in mileage charge for electric cars. So it's either 1.5p a mile or 3p a mile, depending on the type of car you're driving. And then I got us thinking, well, how are they going to know how many miles you've done?
There was quite a lot of talk on things like Twitter, LinkedIn about that. Because new cars don't need MOTs for the first few years.
Yeah. So, I mean, according to the RAC, I was having a look on their website last night. If your car's over, is it 3 years? You need if your car's over 3 years, when you have your MOT, they will clock the number of miles that you've done. I think you have to self-assess. So you have to tell them how many you're going to do, and then either pay it in advance or pay it by direct debit. And then presumably, if you get it wrong, you correct it at the end. And your MOT will report to the government how many miles you've done. But what happens if your car doesn't need an MOT? So according to the RAC, you're going to have to drive your car to an MOT station and get them to log how many miles you've done.
And get it verified.
Yeah. I mean, that sounds tremendously expensive. I mean, I was looking at the figures, and I think the RAC had worked out that the average cost for an average sort of mileage driver will be £255 a year, which is about half of what they will currently be paying in fuel duty on petrol or diesel. But 250 quid's not a lot when you've got to pay somebody to check your car, log it with the government, etc. So, whereas when you fill in your car up with petrol, it just happens automatically, doesn't it?
I suppose if you have your car serviced annually, they might add that in as an add-on to that service and do it within it.
Yeah.
But some people may not service the cars every year, so it's going to be an additional cost.
Yeah, so I wouldn't be surprised if the 1.5, 3p a mile increases fairly quickly to cover the cost of administering this scheme. Surely there's some technological way of doing it. Surely there's electric cars, they've all got apps, etc. Surely there's some way of uploading your data. It just seems so old-fashioned, driving your car to a garage.
I suppose there's all sort of technicalities with it. Is there going to be, if you buy your car in the January to the December, do you have to have done it by a certain point? Is there a deadline to have it submitted by? Do you get a month to do it?
Just seems like a ridiculous amount of red tape at a time when we're supposedly trying to reduce red tape, but they've got to replace the income that they're losing somehow, I suppose.
A couple of other changes that were mentioned. One of them you spoke about at the beginning that was predicted was the mansion tax, or it was being labelled the mansion tax.
Yeah, so properties worth over 2 million. I mean, who decides how much it's worth? That's sort of the first question. So yeah, if you're in a house valued more than 2 million, you're going to be hit with this new annual payment charge. She didn't call it a mansion tax, but that's what it is. Well, they're not all going to be mansions, are they? The price of houses these days, particularly down south.
I was going to say it's also depending on geographically where you're based.
Yeah. So I think if your house is worth 2 million, the bill is going to be 2,500, and it's up to a maximum of 7,500 if the house is worth 5 million or more. Presumably, it's going to be paid as part of your council tax.
I think there was, well, when they switched from Prime Minister's question times to the reporters who were looking at the report that was leaked, there was debate over, is it going to your local council or does it go direct to government? And then it's spent and can be distributed nationally.
Yeah.
So I think that's something to look out for in the finer detail.
It would perhaps be slightly more palatable if it was going to your local authority and being spent locally rather than going into the government's black hole. But we shall see in that respect. And I saw someone online today saying that she's probably opened up a whole new industry in companies appealing against house valuations. So if they're saying your house is worth 2 million and you think it's only worth 1.9, if you're going to be saving £2,500 a year, getting a successful devaluation of your property is going to be very attractive. And I'm sure there's already organisations out there thinking about how they can jump on the back of this.
A few companies registered overnight.
Yeah.
I suppose there's two sides to every point, and one of the points that I saw online was, a couple or an individual may have bought a property 70 years ago that, yes, it's gone up in value, but they might just be on a basic pension income. They might just receive a state pension. And the extra cost is going to be hitting them quite hard.
Yeah, so there will be people that are asset rich but cash poor or income poor. That it's. Some people might argue it's difficult to feel sympathy for someone sat in a house worth 6 million. But there's two sides to every story, isn't there?
Yeah. And then another one that it was slipped in quite quick and she moved on quite quick from the point, so we had to sort of look back over it while the budget was being announced, was the changes to taxes on individuals selling their businesses to an employee-owned trust.
Yeah, I mean that's become really popular in the last few years because there's significant capital gains tax savings to be made if you basically sell your business to your employees. If you're the expert on this, but if you sell more than 50% of it, it was capital gains tax free.
Yeah.
Yeah. So they're now saying that only 50% of it will be capital gains tax free. So that was from November. They just said November, didn't they? November 25.
Even when we looked at the report that was released, it still said November 25.
Yeah, which is very unusual. I don't remember them ever using. Not normally they say from midnight tonight or midnight last night or from next week or something. I've never known them say November. It's like they almost haven't decided what date that's. It's like they're still working on it. Maybe the answer is already out there online. I don't know. It's still, at the time of recording, it's less than 24 hours since the budget. So we still need to digest the contents of it, etc. But yeah, that was again some people were concerned that they were going to scrap this altogether. So bad news for some, but not as bad as it could have been.
Bad news if you were just about to get it over the line and the rules have changed immediately.
Well, yeah, I mean, if you've got a transaction going through in December, you'd be gutted.
But there is still some tax savings.
Yeah.
So it's not completely been eradicated.
No, you're just paying twice as much as you thought you would be.
Yeah. So I think there's been, from our list, more losers than winners that we'd originally noted down.
Well, she did say everybody's going to have to help out, didn't she? So there is going to be more losers than winners.
And I think within everything that we've talked about today and everything that was announced yesterday in the statement, it has affected everybody. There isn't probably an individual or an income stream that isn't affected.
No, so it affects employees, business owners, landlords, savers. Um,
Expats as well.
yeah, um, families on universal credit with more than two children. That that they're going to gain from this. Yeah, so bad, but could have been worse.
So as a business owner going into 2026, are you feeling optimistic?
I mean, I'm always optimistic, but I do have concern for large chunks of certain sectors within the economy. We keep talking about hospitality, leisure, the care home sector. Any businesses that employ national minimum wage people, passing on the extra prices in April is going to be a real challenge. I don't go on social media much now, but people show me stuff on social media, and it's like every week there's a hospitality business in Hull either closing or saying, we're really struggling, we need help. Um, the coffee shop around the corner from us put an appeal out last week saying, we're hanging on by the skin of our teeth. So I'm disappointed there wasn't more help for the businesses in those sectors. Very little help for SMEs. Um, no encouragement to hire more people other than the training support, which is a positive. Um, employers national insurance at 15%. We talked about this a lot when they announced it last year, but taxing businesses for employing people at a time when we need more people to be employed just doesn't make sense to me. She could have. I know there's a cost to this, but she could have increased the 10.5k employment allowance. She could have, to pay for that, she could have said, if you've got more than X number of employees, you don't qualify, etc. She could have sort of brought that down so that smaller or SMEs are helped rather than larger employers. But none of that. She might come to regret that next year when potentially more hospitality businesses than we're seeing currently, unfortunately, have to close down or reduce the offering that they're giving. Maybe opening less hours, etc.
I mean, we will be doing this again in less than 6 months' time. So
Yeah,
there's always the possibility.
yeah,
So I think our overall advice is to speak to your accountants, financial advisors, depending on what may affect you, to work out how are you going to be affected and if there is anything that can be done to either mitigate those effects or change the way your business operates to help reduce any financial impact.
yeah. Do the sums with your accountants. Work out how much your wage bill is going up in April. What are you going to do to mitigate that? So, you're going to put your prices up? Are you going to cut the number of people on your payroll? Are there any other costs you can save? Perhaps you're making enough profit where you can cover it. It might be a combination of all of those factors. Look at the way you're extracting profits from your company or your business. Are you doing it in the most tax efficient way? And just do it all well in advance so that you've got time to make the changes that you need to make.
Brilliant. Thank you for your time this morning.
Pleasure.
Thank you for watching. Please like, subscribe to our YouTube channel. You can always send us any queries in the comment section or message us via social media on Facebook, Instagram, and LinkedIn. Thank you very much.